Hello and a warm Collisions YYC. Welcome to my guest this morning, Mr. Craig Senyk. How you doing, Craig?
Very good. How are you doing, Tyler?
Oh, man, I'm amazing. Thanks for coming on. I always joke, Calgary conspires. You and I have met through events. We've met through amazing people like Steve Messler and Jerry Greenall. And I do love Calgary because good people tend to know good people, and then they introduce you to those people. There's a follow through in Calgary that I've noticed seems to maybe outsize or outpace other cities where someone says they'll introduce you to someone, and they actually almost all the time they'll do it. I don't know if that's been your journey as well.
It has, but the best thing about Calgary, Tyler, is we're all good people.
Yeah, touche, my friend.
Yeah,
yes, we are. I am very all in on this environment, and by the vibe of our community, by the drive of our economy, by the amount of people that are coming here from other big cities. I think the secret's out, Craig.
It is, yeah. So my goal is to meet everybody in Calgary, and it sounds like that's your goal as well through this podcast.
I have been doing that. This is business dating on steroids when you start a podcast, by the way. Not only do you get to meet people, but you get to have a meaningful conversation with them about something they care about. It's kind of the perfect formula in case anybody's looking for the secret behind why podcasts are so successful on so many levels. That level of, Craig, what do you care about? Let's talk about that. And that's a great launch off into, let's let people into the tent. You're the board chair at Mawer Investment Management.
Yeah.
What are you guys like? If I haven't heard of you, which many people in Calgary probably have, but give us a little peek inside, and then we're going to get into a topic I know you're really passionate about, which is culture. Mm-hmm.
Culture, yeah, absolutely. Well, you did pronounce my name right, but you didn't pronounce our firm name right, which is Mawer Investment Management. Mawer.
I apologize. As I was saying it, I was like, I think I just blew that one. Oh, Craig, call me out, throw me to the mat on that one.
Exactly.
Mawer Investment Management.
But I've been at Mawer for 27 years, and I've been dealing with that for 27 years as well. And the reason we call it Mawer, you can think of it as more money. That's the easy way to do it. Everybody wants more money. But it was founded by Chuck Moore, so that's the phonetic pronunciation of his last name. In 1974, and he was a Calgarian. So we are a Calgary-based firm, which is now a global-based investment organization managing money for institutions such as pension plans, not-for-profits such as foundations, and individuals as well across Canada into the U.S. We have a Singapore office and some people in the U.S. And we're independently owned. Chuck's motto when he founded the firm was "Do the right thing." Our investment style is best exemplified through our slogan of "Be boring, make money," and independently owned by over 80 owners that are all working at Mawer, so roughly a third of our employees. And I think that's probably one of our largest competitive advantages is that we're owned by the people around the table here.
And truly owned. I know a lot of companies say that, or sometimes it's a slogan, but it sounds like reality. And even I'm looking at a deck that you shared with me, and at that point it was 70. And now it's already 80. So this is something you're continuing to expand into, it sounds like.
We do, yeah. It's an annual process for us. So we are, and it happens at the end of the year. So I'm chair what we call our ownership oversight committee. And in October, we get nominations from other owners for employees that we want to welcome into the ownership. We do an assessment of that in November and December, and we vote on it early in the new year. So by the time I next talk to you, I hope it's up over 90.
Amazing. Well, how long have you been with the firm, Craig?
Yeah, 27 years. I joined in the late 1990s in the middle of the technology bubble, which was a very rough time for us as a firm, given that's not how we manage money, which was largely speculative back then. So it was interesting because, we were earning I think 20% plus returns for our clients in the late 90s, but the markets were giving them 30+%. And so we couldn't attract any new money. And when that all blew up, we went from, at that time, $700 million in assets, roughly in the year 2000 to where we are today at roughly $90 billion in assets. So it's been a really huge Calgary-based growth story that you mentioned a lot of people probably know about, but we really kind of fly under the radar both here in Calgary and across Canada. So
how critical is it, or I guess the ability to be independent in this space where it's often controlled by large players, maybe do the right thing? Isn't there a mandate? Just talk to me about the importance, the value that provides, and just the freedom it also gives you as leaders in the organization, as owners, to make the right decisions versus something that's mandated maybe from the other, from other jurisdictions or with a heavy hand that isn't your own.
Yeah, exactly. Well, we are a people-based business.
Mm.
It's, we're really our biggest assets is the people around the table. And so our ability to attract and retain the best people is because of the independence and our ability to offer them ownership. So one of our values is think long term, and that's what we want everybody at the organization to be doing is think long term, and the ability to offer them ownership kind of puts them immediately into that mindset. So yeah, our annual turnover rate as a result is very low. It's I've never seen it in my 27 years here of getting higher than 5%. I talked about being here for 27 years. That's I'm one of the longer term employees now, but it's very uh, very often the case of people around the table being here 10 plus years. So,
Mm.
and that's really important from a client perspective as well, because, the people they've been dealing with is
Yeah.
it's kind of the same people they've always known here. And our clients, their average 10 plus years as well.
Mm.
Chuck, who I talked about already, who founded our firm, the very first individual client that he brought in to the firm in 1974, she was with us up until a couple of years ago when she passed away. And in that time, she dealt with four people in almost 50 years. So she dealt with Chuck. She dealt with another individual after Chuck, then Gerald Cooper Key, who is our senior shareholder, and then Stephen Vischer. So it was like four people she dealt with in almost 50 years. And all those people were here for a long time, and they're all owners in the organization. So that just kind of exemplifies that thinking long-term mindset.
Well, that level of intimacy that you develop with each other and with your clients, and the clients having that trust. So much, what isn't built on trust, but that long-term relationship, especially with wealth, especially with intergenerational. Not to camp out on this too long, but
Yeah.
I'm thinking about people that would be attracted to work at more from other sectors where, like, I'm assuming, are you attracting new people into the industry, or are people going, wow, okay, I've worked at some of the other big players, some of the other global firms. I want something more personal. I want something where it's more human. Is that a value proposition for your, because we're all looking for talent, right? It's all about
Yeah,
people at the end
yeah.
of the day. Like you said, we're a people company. I can only imagine that's a really solid attraction strategy.
It is, yeah, and we attract people from your traditional university finance background, but we also do attract people from a wealth of other educational backgrounds and other sectors as well. I think that's important from a diversity standpoint to get different mindsets around the table. We're ultimately all attracted by our purpose. Of why we're here as an organization, which we say is making people's lives better. And you don't have to be a finance major to want to make people's lives better. And that evolution of a purpose is come through time as well. It started to get convoluted as through time, and it started with the roots of it of, as Chuck said, is do the right thing. He told me, he goes, remember, that's my name on the wall. As long as you always do the right thing, I don't have to worry about my name being on the wall. We kind of evolved that through time to providing peace of mind for clients. We realized by providing peace of mind for clients, we needed to be the best. It's ultimately clients' assets that we're fiduciaries over, so we want to be the best in providing them the best possible returns for those assets. And then it evolved from there, that we realized we really have an opportunity to set a model for the investment industry, which is part of our purpose as well. And that model became rid the world of investment evil. And so all these lines were floating out there, and it's like, okay, this is starting to get confusing here. So we just distilled it to make people's lives better. And as I said, that's ultimately anybody that comes into this organization, whether they're from a finance background, or our organization is also driven by technology as well. So we have a lot of people from IT backgrounds, business people in terms of the people that manage this company as well, operational folks as well. We just attracted a chief operating officer from BMO as well, that comes from more of an operational background. So they're all, the fact that they all come here is they see from the outside looking in, and once they get inside, it's really about making people's lives better. And we think of that not only for our clients, but also in terms of our employees as well. When we talk about ridding the world of investment evil. We also talk about ridding the world of management evil as well. So in terms of how we think of the employees around their table, and then also in terms of our community as well. We have a large community presence as well, because we see that as a big part in terms of making people's lives better.
Well, I've certainly known that's how you and I have crossed paths is through a lot of the community initiatives and the events that always seem to be involving music, Greg. I think there's a bias for you though.
Well, yeah, for sure. And I should speak to that a little bit, because, there's very much a firm community presence, and then I do have a very much of a large community,
Yes.
Personal community presence as well, based on my personal passions, which is around music, arts and culture. I'm also on the board of Theatre Calgary, sport. I personally support some Olympians as well, and then, but from a firm standpoint, we think of it as in three pillars as well, which is education, healthcare, and basic needs. So there is a differentiation there, but I'm not the only one with a large personal community presence as well. There's a number of my fellow owners that have their own personal passions out there in the community as well.
Well, it certainly seems like there's a very high level of consistency in terms of the values shared by your team and what allows a group to stick together. Talk to me of the role of culture. It's so easy to talk about it. And you and I joked before we got on, like I've talked to some large organizations like, oh, we're only 500 people. We don't have to worry about culture yet.
Right.
But if I look at I've got a slide up here from 1 to 80 billion, and it's probably grown past that even since you sent me this a few months back. How much did that play a role on that journey? Because if I look at it, it's a right to left graph, but there's some pretty good, it's not bumpy, but it's pretty consistent up and to the right if I was to draw it out. And it's so easy sometimes, like, we don't have time to focus on culture. We're focused on making money, or we're focused on this. As I listen to you talk, this certainly sounds part and parcel to me. And maybe this is saying it more as a public service announcement for owners, managers, founders, leaders out there. They're like, once I have time for that, I'll work on it. But man, I really got to get some work done.
Right,
Talk to me about the balance between, because it gets pushed to the corner of the desk sometimes way too easily.
Yeah, no, 100%. And the slide you see is from 1 to 80 billion. The fact is, we wouldn't have got to 1 billion if not for our focus on culture at that standpoint. It was like we'd grown very fast. We went from 0 to roughly 700 million when I joined, and that was a bit of a plateau for us, and we had trouble getting through that plateau. And one of the issues we were struggling with was just the ownership question of how to transition ownership from one generation to the next. And this would have been when I joined in the late 90s. And up until that point, we did have a strong culture. It was very much a values-based culture, though. It was very much built around this concept of doing the right thing. And that's the concept that Chuck had instilled in the organization, and that pervaded through the organization. But what we began to focus on in the late 90s was that we really began to realize that we wouldn't be, as I said, be the best or be high performing without complementing a values-based culture with a behaviors-based culture. Mm-hmm. So now I define our culture as not only being values-based, but being behaviors-based. And our values today, they're not anything necessarily unique. It's act with integrity, put clients' interest first, pursue excellence, work as a team, think long term. For us, it's more than the words on the wall. We exemplify our values in terms of our day-to-day stories and how we're living those values, which I can always come back to. But what we did in the late 90s is we also introduced how we want to act and behave in order to be high performing. And so we came up then with the help of a consulting firm called Focus Consulting out of Chicago, our core 4 behaviors, which are candor, curiosity, accountability, and appreciation. And we believe those 4 behaviors is what started to drive the high performance for us in the late 90s, which got us through the $1 billion mark, which then got us on that path to where we are at almost 90 billion today.
Do you feel you're resonating with me? I did some work with some consultants probably maybe 6-8 years ago around our values, and they had some experience with IBM and some work that they'd done back in that time frame around observable behaviors versus values on a wall, and how critical it was that if you get your observable behaviors right, you actually barely even need to define them because people can observe them and they're tangible. And I think sometimes, and I've kind of heard you say it a little bit, the values get pushed up and okay, we all agree. Yeah, absolutely. But then how do we behave on Tuesday at 10 in a meeting? That's the difference. And I find a lot of companies make the mistake of mistaking one for the other.
Yeah, no, 100%. often thinking of them as one in the same as well. One of the first things an employee gets when they come into the organization is two things. They get a values and action book, which is essentially a book of stories of how we've been living our values for the last 50 years. And then they get an onboarding through our learning management system that teaches our behaviors and what it means to be candid, what it means to be curious, what it means to be accountable, what it means to appreciate employees around the table. So and that, it has a language in itself. So an example of one of the values that we have is our number one value, and the ordering of those values is also important for us. Act with integrity is at the top of the list. Put clients' interest first is second. And we had a conscious discussion around that. It seems natural to put clients' interest first at the top of the list, but we realized we wouldn't jeopardize our integrity in order to put clients' interest first. So that's why Act with Integrity is at the top of the list. And we have a story in this Values in Action book. One of my favorite stories is it's called No Small Breaches of Integrity. And so when we moved into this office that we're in today about 10 years ago, there was a coat room, and people would bike or run into work and they'd use that coat room as a change room, but it didn't have a lock on it, and people would walk in and people were changing, so a little embarrassing. So someone
there were some moments.
Yeah.
Actually.
So someone was actually our current president, Jim Hall, had suggested, boy, it'd be nice to get a do not disturb sign for that door. Probably would have been easier to get a lock, but do not disturb sign. So one of our analysts was on a research trip, stayed in a hotel, and took the do not disturb sign from the hotel and put it on a door. And Jim saw that and said, well, did you pay for that do not disturb sign, or did you ask for permission for taking that do not disturb sign? And the response was just a piece of plastic. I don't think they're too worried about it. And he says, I want you to call the hotel and offer to pay for it. And sheepishly the analyst called the hotel, and the hotel kind of laughed it off. They said, of all the things that we're worried about you taking, the do not disturb sign is the least of it. But that's that concept. There's no small breaches.
That's a great story. So, that's a great origin story, by the way.
Yeah. And so somebody new into coming into the organization, they they read this. That's our ask of them. Read the Values in Action book, and they get a concept of what Act with Integrity means to us, as opposed to just seeing the words on the wall, right? So
do some of those have even more impact because maybe your industry, the industry you're associated with, let me reframe that correctly, sometimes cannot be looked at in that way about the maybe there is some investment evil out there in the world. So it's even more powerful because it might seem like oh wow, that's very different than maybe the stereotype, the view, the overused way of positioning the fast talking, super slick moving, and investment banker kind of PE world that gets portrayed in movies, and sometimes experienced. The stories you hear in the news about people's money getting stolen through shady investments. So it feels like you're also competing against what often is a negative storyline.
Well, 100%, right? And that's why I said we had this narrative in terms of our purpose statement of ridding the world of investment evil. And that was exactly the reason why, is that, we want to create an organization. It's like a lot of firms don't want to be copied because they figured it doesn't, it will take away from their competitive advantage. We want, and this is why I'm doing this with you, is I want, other investment firms to, to listen in and hear about some of our concepts and introduce that to their own organizations, because we want to create a better industry at the end of the day. And I think, we would rather have a smaller piece of a bigger pie than a bigger piece of a smaller pie is what it comes down to. And I think we'd all be better for it. It's, that's our part of our inherent goal, is to improve the trust that people have in the investment industry, and it not necessarily being associated with some of the things you've spoke to.
Mm-hmm. Well, that is the overused kind of meme, if you will, about your industry. Talk to me about keeping this top of mind. Like, is it obviously it gets ingrained. You've got leaders that are owners that are really bought in, and also we all work in busy environments where we get bogged down with the tasks of the day. Is this actively coached? I know it's on the wall. It's probably started your meetings. Just talk to me about the reality of kind of the rubber meets the road, because it all makes sense. How do we as a collective, owners, leaders, people that care about this thing, how do we keep it top of mind when everybody's busy as hell?
Yeah, and it has its own language, and the language can get forgotten as well if it's not part of your daily language as well. And so it does start with the onboarding process. I talked about one side of it, the value side of the values in action book. The other part of it is learning the behaviors, which is on our learning management system. So we got videos on what it means to live our behaviors as well. Example of one of our behaviors, which I know is a big part of who you are as well, Tyler, is curiosity. And so, when we talk about curiosity, we talk about being above the line, being below the line. And, so you're hearing from that and you don't know what above and below the line is. So you got to talk about, if you're above the line, you're interested in learning. If you're below the line, you're interested about being right. And so there's a big concept between the interests of being above the line in learning versus being right. And very often discussions happen in any organization below the line where people aren't listening. They're talking because they want to be right. So we often talk about to shift from being below the line to being above the line. Let's move from being right to learning from one another, and there is where you get to better decisions ultimately. And so I can go on for 20 minutes just on curiosity, right? And so
it is one of my favorite topics, Greg, so we can camp out on this as long as you want.
So it's part of the onboarding process, and then it becomes part of our regular vernacular as well. In meetings, we're asking ourselves, is this conversation above the line or below the line? And if it's below the line, well, how do we shift? I host a weekly investment call within the organization as well, which was actually one of the positives that came out of COVID, is that we were looking for how to communicate in our organization during COVID. And previously, what we would do is we'd go offsite and we have a quarterly lunch where we would talk about some of these things. Couldn't do that during COVID. Things were moving very fast. We didn't want to wait even a month to communicate with our employees, so I started doing a Friday call. And initially, the call was just to talk about what's happening with COVID and just how to deal with the health aspects of it, and moving from an in-person environment to a work-at-home environment, and deal with some of the complications with that. And after a few months of that, I started to run out of things to talk about. And what I shift my mindset is, like, if I can't celebrate something that is happening in this organization weekly, I'm really not doing my job as a leader in this organization. So that's where I started to bring on people within the organization to celebrate something that was happening in their area and talk about how they're living the culture in those areas. And so it started to become a celebration of what is happening in this firm on a weekly basis. And so that's where we get to talk about, well, what happened in your group and how that is an example of us being curious or being candid, giving good feedback, being accountable, whether that is to our clients, our employees, or to our community, and at the same time is just this overwhelming sense of appreciation about what's happening within the organization. So
it's such a great example of not having to have all the stuff. I'm the leader, I have to fill the meeting. No, you have a whole group of people that can share what's going on. It's so easy to sometimes climb on the white horse, right? I will write in with all the thing. No.
Yeah. And that's never been part of our culture as well. But, in particular, in times of crisis, you kind of fall into that, which, COVID certainly was. But,
it was a lot of things, Craig. It was, we're going to look back on it even now and go, that was a crazy time.
It was, yeah. But eventually, once we got through the crisis portion of it, we just reverted to our normal selves, which we talk about. We are, at the end of the day, a very flat organizational structure. We don't, we're not really hung up on titles here. It's we talk about the fact that it's important for us to be able to communicate across teams, across individuals within the organization. So, ultimately, my role as chair and one of the leaders at the organization is to serve others within the firm, and that's happening by going out and talking to people right across the organization to be able to hear. So it's not that I see myself only serving the people that report to me, but it's serving all levels within the organization, and that what leads to a flat organization on a flat communication structure. And you get to hear about where there may be some roadblocks or challenges in the organization, and to get at that before they become something bigger.
Remove friction, make it easy to be successful. How do you balance out titles and structure that make sense? There's reasons for it. We understand why. There's hierarchy. You do this, you do that. Does that leave you then with more of a flat structure, really indexing on who does what? What value do you provide? What service do you do? What's your workflow? Just trying to understand, because sometimes a hierarchy can be put in place. There's titles. Oh, so-and-so has that title, so therefore they do this. In a flat environment where everyone can talk to anyone, to me, sometimes what can trip up is, oh, sorry, what is it that you do the best at? And how do I make sure you're doing that? How do you guys balance out those two things of the strengths of a flat of a flat environment, but then also everybody really being clear on what value everyone is able to provide?
Yeah, well, it's essentially one and the same, and you're touching on one of the concepts that's very much part of our culture and one of our goals as well. I talk about three stakeholders in the firm: clients, employees, and the community. So when we think of the stakeholder employees, one of our goals there is to have every employee be operating what we term as their area of genius. And you get at area genius by learning about what makes people tick, what's their passion within the organization. So there's three things that go into an area genius: is ultimately, what do you love doing? What are you good at doing? So what's your skill set at, and what's going to add value to the organization? So the intersection of those three things, if you think of a Venn diagram, right in the middle would make somebody's area of genius. And so, when they come, it's rare when somebody comes into the organization that they find their area of genius immediately. You get at it by being able to have a flat organizational structure, people knowing people across the organization, people within the organization be able to see across the organization and as well, and feel quite comfortable about having these conversations, not only with their leader, but with others across the organization, and nobody feels threatened by that, because that's the overriding goal, is to help people find their area of genius. So, they may be, a good example is, we did have someone come in on our research team. Very good. He brought a technology bent to research within the organization, and now he's an acting interim chief technology officer, and never felt threatened to leave. Why he came into this organization for the purposes of picking good technology stocks for the organization to providing a great technology platform for the organization, right? And so, I just find that as a fascinating move. To that people feel safe to do within our firm.
I even like the way, because I've heard what's your genius, but I love even your slight shift, or in my mind, it's noticeable, the area, words matter, area of genius. That makes it so much less about what you are or you aren't versus what's that area that you can apply that genius to. I just, something in the language feels very deliberate to me, and I quite like that.
Yeah. Actually, I hadn't thought about that one, so I appreciate that perspective.
The marketer overanalyzing the words. I'm like, well, if you said it this way, it means something slightly different. As one of my old creative directors, he says, get hung up on the words, because words matter. What's your area of genius, Craig? And how's that evolved for you, even in the last kind of 5-10 years?
Yeah, well, I'm there now,
Cool.
Tyler. So it's for me, I see my life purpose as creating community. So I've been able to do that in some concept within the firm through my life. I grew up in the firm on the client side of the business. So I started managing individual clients, and then I started managing some of our institutional pension, not-for-profit foundation clients. Then I became a people leader, so it was creating community that way as well. So I managed our client team. Then I was president, so I was creating community that way. Now I'm chair of the organization. So now I see myself as being able to create community at all levels within the organization. Certainly, from a client standpoint, I still like to get out in front of clients as chair of the organization. I love to be creating community amongst the employees of our organization as well through different methods. And I now have time to create an even larger share of community within our communities as well, whether that's through Calgary or Toronto, which are our two biggest places for us that we do business.
I love it. Talk to me a little bit about I was just having this conversation with a fellow entrepreneur founder, and there's such a bent, or there's such a storytelling that goes on in our world around, like, if you're going to be successful as a founder, you got to exit. You can't stay at the business for 27 years. That's crazy. Were you not like, what versus I'm chatting to more people. They're like, well, I like what I do. I'm engaged. It's passionate. I have room to grow. I can obtain that sense of self. That doesn't mean I have to exit and start something new. I feel like our society right now is so indexing hard in the entrepreneurial world of like, if you don't found an exit, you weren't successful. But then I hear you 27 years, and there doesn't sound like there's any diminishing of enthusiasm for you.
No. It's I'm lucky that way because I love what I do. I was able to find it fairly early on in my career. So not everybody is necessarily lucky that way. I'm not a founder. I respect who our founder is and has since passed on, and the legacy he left. I still remember his name on the wall. So I see very much my duty to remind everybody coming into the organization of that and to protect his legacy. Also at the same time, I represent a third generation of owners in the organization. So Chuck was, the first generation. He passed his ownership on to the likes of Gerald Cooperkey, who started our international equity fund. He was our chair for years and years and years before he retired from the organization. I bought my ownership from Gerald, so I'm third generation, and now I'm in the process of selling my ownership now to the fourth generation, and I take pride in that. And one day, I will have no more ownership left to sell, and it's and that's not anytime soon. That'll take years to do, but at that point, I'll probably still have a role to play within the organization, but I'll take probably the biggest amount of pride I'll take is, at that point I've transitioned on to that next generation, and it will be their time to maintain Chuck's legacy.
I love it. Something I don't think I've heard you say the word brand once in this conversation. You use the word legacy, and oftentimes in marketing, some of the rules, don't use your name. That's too limiting. That's going to hold you back. You need to come up with some made up name, and then you need to make it mean that, and you need to brand it and identity it. But I've heard you make this, it's so human, the words that you use. You didn't say brand. You said legacy. You said his name on the wall. How much has that played into the culture? Because I'm hearing it loud and clear in everything that you say. And it's just as a marketer, we look at brands and is what you're describing, but you're never using that terminology because you're always you make it very human. And I think there's something to be called out for that.
Yeah, I don't know if it's as intentional as you may be reading into it.
Craig, I'm giving you lots of credit today.
I'd love for you to. You may have met our chief marketing and people officer, Allison Webb.
I don't know if I have. I don't know.
Who's brilliant around the concept of brand as well. So maybe it's her. Through some type of subliminal messaging that's been able to... If
she's in her area of genius, I'm not going to be surprised, Craig. I'm not going to be surprised.
But, in my mind, she's been with us for, I think, 15 years or something like that, and has done a great job from a branding standpoint. But, even I don't hear her using that name as well. But obviously, what we think about from a branding standpoint is reputation, and it takes, the old line is it takes a lifetime to build a reputation and a night to lose it. So you can
hopefully you get those nights out of the way earlier in your journey. But anyways, we were all 18 once, correct?
Yeah, absolutely.
I love it takes a night to lose it. Isn't that the truth? I do appreciate it, and so much of it. It's easy from outside to almost overanalyze it. but also I respect the fact that no, this is just who you are, and this is the journey you've been on, and it's unfolded over a lifetime.
Yeah, 100%. Yeah, and it's on an individual basis, but more importantly on a firm basis as well. It's we only need to do one thing as an organization to lose our lose our reputation. The best line around that is what Warren Buffett says is don't do anything that you wouldn't want to see on the front page of a newspaper the next day for your friends and family to read, right?
Yes.
And a lot of organizations show up on those front pages of the newspaper without being a lot more intentional about protecting their reputation.
Yes, and the world that we live in, whatever that negative is, it gets amplified at scale instantaneously. And often maybe indexing more than even the event itself. I'd be remiss if I wouldn't ask for a little bit of like, what are you seeing out there? Are we feeling good about the markets? We're at the end, or kind of, people are like, is he going to ask him anything about like the financial side of this? I'm like, no, we're talking about arguably the soft stuff that actually is the real stuff, in my opinion. And I know you agree with that. But what are you seeing out there? We've got an election coming down that would have already been now taken place by the time we air this. We've got some stuff in Canada, US. I don't know, any perspective you want to share just for the fun of us being on this call?
Yeah, the interesting thing is, and this is, now with the benefit of hindsight of being with the organization for 27 years, is that I can't, I'll put myself back in any moment in the previous 27 years and realize that there's always a lot of noise in the moment that people get worked up about, and just trying to figure out whether they should invest or not to invest based on that noise. But you take that long-term perspective, it really won't matter. You said a lot of those things will have happened by the time this episode airs. A year or 2 years from now, people, will realize that didn't really matter at that moment.
So, the truth is, there's a level of consistency that you can trust the markets. Yeah.
So I think it's important to have that perspective. Is ultimately ask yourself, well, why are you investing, and what's your time frame for investing? And if this is something that you hope you'll have to live on 10 years from now, don't worry about what's happening today. Just realize 10 years from now, you will have the benefit of time for that to have worked in your behavior, and the beauty of compounding your money will has really worked to your advantage over that time. So all that being said, to play to the drama a little bit, we've come through a period of high inflation. From an economic standpoint, we're starting to see inflation rates come down. Interest rates are starting to come down, and that's really what's been driving returns. We've come through a period of very strong returns on anticipation of rates coming down. I would say probably one of the big risks from an economic standpoint is if inflation comes back stronger.
As the economy picks up again, does it have a correlating effect?
Central banks are in a delicate spot right now that they overshoot in terms of reducing interest rates. We get a big pickup back in inflation. That would be a big negative for markets for sure. So that's the risk on the economic side. Definitely, from my standpoint, which is interesting, over the last 27 years, I can't remember a period of higher geopolitical risk than what we're seeing right now with Russia going into Ukraine, with the problems in the Middle East between Israel and Hamas and Hezbollah, and then just the rise of populism in politics, which is somewhat unfortunate, but it comes out of us seeing big divergences between the haves and the have-nots that we haven't properly addressed, and populism gets at that, but probably gets at that in the wrong way. And so that's why we see some of the things going on in the U.S. and Canada as a result. So I also realize these things are cyclical as well. Geopolitical risk is cyclical. It's probably as bad as I've seen it, but it's not. In the context,
it's not unprecedented when you look back over the last 100 years.
It's not unprecedented. So I see that things will spike here, and then we will realize geopolitically that we will all benefit better as a society by figuring these things out and having dialogue around it than having conflict around it.
Getting along.
So this will go the other direction as well.
Back to your point, this too shall pass. But at the time, you're right. It makes for very great rhetoric, and it's there's some hot spots. There's some things that you can focus on, and it's easy to to focus on short term thinking, right? Which is very risky. And the market statistically, we've all seen the graphs, we've all seen the charts. Over time, it will go up and go down, but it will continue to often, or it certainly has for this historical past, gone in the right direction, arguably. Like you said, only if you look at long term.
Long term, yeah, and if your time horizon's 1 year, we might be down a year from now. If your time horizon's 10 years, we're going to be fine. I appreciate that. So just invest with that perspective.
Yeah, don't chase the day to day. Greg, so good to have you on. I really appreciate your time, your energy. I love you're speaking into some of my biases, which is hard not to enjoy a conversation when I'm sitting over here trying to be objective. But I agree so much on everything you say. And one of the things I love the most, to get away from the words, but just the core behaviors versus the values, and separating those, and how important that is, and where I think that's often certainly a miss earlier in my career. We're like, these are our values, and then 6 months later, I'm like, why aren't we doing that? Because we never connected it to observable behaviors. That changed the whole game for me. We actually moved our values completely to observable behaviors, and then let the team kind of almost say back to us what they think they were, being accountable, be curious to learn, speak up. Some of a lot of similarities that you have. And I think it makes a difference, because it also makes it easier for people to go, oh, thank you. I get it now. I understand. I understand what the guidelines are here. And that's often the greatest gift we can give to our team, is just let them know where the guardrails are, and then support them to kind of play in that space. Companies, I find we struggle when we don't do that. That lack of clarity. What I heard the other day, a clear communication is kind, unclear is unkind. And I'm like, there's a lot of truth in that statement.
Yeah, absolutely. So
if someone, sorry, go ahead. No, go ahead.
No, yeah, please go.
I was going to say, if somebody wants to get a hold of you, obviously you're on LinkedIn, you're out there, they will probably run into you into the community. If there's music and there's kids and there's things to be supported, I will often know that you're going to be there. I look forward to bumping into you at those events. But if someone wants to say hello or have a chat, what do you recommend? What's your favorite form in all the ways that we can communicate? What's your favorite form?
For generally LinkedIn's kind of the best. People, I do have a Instagram profile that kind of, as you acknowledged before the call, talks more about, the personal side. People kind of make fun as like, Instagram's fun Craig, and LinkedIn is serious Craig. So think of it.
Okay, nice. We are allowed to have multiple personalities, right? We're allowed to have multiple views of ourselves.
Yeah. So if it's fun Craig you're looking for, Instagram. If it's serious Craig you're looking for, which is you could go to LinkedIn. So
I bet there's lots of crossover between those two Craigs, but that's just my. You seem like your area of genius has some overlap, and so there's lots of circles maybe on your Venn diagram.
There's a few, yeah.
And that's okay. Craig, it was an absolute pleasure having you on. Good to get to know you and kind of take those random Calgary bump-ins, which happens to so many of us in this amazing city, and turning it into a good conversation. So I really, really appreciate your time today.
Yeah, well, thank you, Tyler. I appreciate you giving us a platform for this.
My pleasure.
Yeah.